At Madoff Securities, the individual stocks that they owned were not registered in the name of, let's say, Home Depot or Walmart. They were registered under the name Madoff Securities. So anybody working there, that's what they saw. So to say that they didn't know what was going on or something was wrong is going to be tough to prove. People want to see the books more often, and they want to see what you're trading, what you're in and out of. They want to see the actual names of the securities. People pay more attention to it now. We used to have investors that would say, okay, I have $10 million, and we'll give it to you for 5 years, and you've had a great track record, things are great. Now investors are looking at it and saying, okay, what is it that you're actually buying? Do I want to be in the oil sector? Do I want to be in wind power? Do I want to be in consumer durable goods, whatever the case may be? Not only do they want to know what sectors, but they want to know what we're trading. They want to know the trading style. There's just a lot more questions being asked. Well, working at a hedge fund, it is really impossible not to understand what went on there. So if you're working there and you have a return of 1% or 1.25% every month for years, that raises a red flag. And of course, the SEC picked up on this years ago, but did absolutely nothing. So that's a red flag as well. I don't know if anybody there would be under investigation, but it'll be interesting. You have to assume that everybody else there will be questioned, will be subpoenaed, and will be under investigation. If I were an investor in the company, I would want to know exactly what's going on. Maybe not so much with his health, but is he healthy enough to resume his responsibilities? Look, he's the face of the company. He's the pioneer of the company. When Steve Jobs is healthy and he's innovating and everything's going well for Apple, the stock soars. As an investor, if I own the company, I want to know exactly what he's doing. If I'm an investor, I want to know what are his responsibilities. What does day-to-day mean? What does in the office a few days a week mean? What does at home? Is he in bed at home? Is he not working? These are things I would like to know. Now, specifically with his medical condition, I don't need to know 100% about what is going on. That's a privacy issue. But as an investor, I'd like to know what the face of the company is doing. You also have to look at the fact that a year ago it was $18 a share. Now it's about $7.10. Did hit a low of 70 cents. But when you look at some of these stocks, you have to look at two things. One, where were they a year ago? And then, are they going out of business? And if you don't think they're going out of business, it gets to a point where a level where expectations have come down far enough that these companies can beat and meet expectations. Its stock was trading at $38 2 years ago, $17 a year ago, now $12.41. Did hit a low of $2.55, but people are starting to go back to hotels. And I've been away a little bit lately, and people said, hey, we're starting to see a little bit of a pickup. Again, when you short stocks, you have to be careful. The orange can only be squeezed so much. Yes, there's a little juice left on the short side, but if companies take expectations down low enough and start beating them, there'll be a short squeeze, sellers will leave, and there'll be more people looking to buy the shares.
Real quick here, is S&P 500, does it continue? Do we see the continued gains for the NASDAQ, Dow, and S&P into the third quarter?
I think there's a little bit of a bias upward. I don't think that the economy is really turning yet. We'll see some numbers count later on today, the housing index. But I think we really go sideways. Hedge fund managers are down. Last year they have some gains to make up this year so they can pay their employees, and they've been buying, and they did well in the second quarter. Second quarter is the first quarter we've seen since the downturn to have a positive return. The problem is, are the banks beginning to lend money out to consumers and small businesses, which the answer is no. We haven't seen that yet. The second quarter was very strong for Goldman Sachs. The stock performed. It was up 40%. JP Morgan was up 25%. Citibank was up 20%. So those stocks have done well. They've performed. They've made business in trading and underwriting. But until the banks really turn it around, start lending, and start making some money from loans, you may see them a little bit of a holding pattern right now. And maybe give back a little bit in the beginning of the quarter. If you look throughout the country, there's different areas, different pockets.
It's the usual suspects.
Florida, Arizona, Las Vegas, certain areas of California where prices continue to fall. There's some over-inventory of homes in California. They say they can't get rid of them until the year 2011, 2012. So I think things will turn well before then. But when major markets like Arizona and Florida are still falling, and there's still houses for sale, and the prices keep coming down. Well, I spent a lot of time down in Florida, and I continue to see houses for sale. And every time you're down there, sometimes they have the numbers that they're trying to sell them for in front of the house, and the numbers keep coming down. You're looking at developments that began 2 years ago that are actually vacant with weeds coming up. There's just so much volatility down there, and you're looking at houses in Miami now that used to go for $1 million are now going for $500,000, $400,000. Beautiful homes, and they still can't sell them at these prices. So that's going to have to turn. Some of these economies down, again, in the warm weather states or that had big booms, Las Vegas, Arizona, Florida, California, these will have to bottom before the economy totally turns around. Unless companies start beating numbers and maybe raising guidance as opposed to lowering guidance, they could tread water for a little while and go sideways. We saw a good second quarter, but I think we're going to have to see companies actually now outperform, beat numbers, maybe maintain or raise guidance for the stock market to continue to rally.